Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope everybody is doing very well. And in today's markets, guys, well, it was just a little bit of a slow day. Very low volume day on the SPY and QQQ. Take a look at your volume down here. Extremely slow volume on the day, SPY and QQQ, which pretty much led both of those indexes to be largely flat on the day. We didn't really have any news either. No macro news in terms of the economy, jobs, or inflation. And we also didn't have any geopolitical headlines coming from the Middle East or Ukraine either. So very, very slow day as a whole, but I do have a very nice video prepared for you nonetheless. Today, we're going to cover a few things. First, we're going to start off with some big earnings that we got after the close today and before. So we're going to cover Uber, ARM, and AIRBNB, the three biggest ones today. And since tomorrow, there isn't really many big companies reporting, I'll be covering a few that happened today tomorrow. So tomorrow we're going to be looking into Shopify, Robinhood, and the trade desk. So those will be tomorrow after the close. As well, after our earnings, we're going to take a quick look at a technical analysis rundown in terms of our major market indexes and then our big tech names. And lastly, follow it up with a review into my portfolio and see the trades that I made today and the ones that I have put forth for tomorrow. So without further ado, guys, let's get right into today's video. And once again, I apologize if my voice is kind of off, still battling this cold right now, but it's still, guys, this is the start of the bull market. So whether we're sick, tired, it doesn't matter. We have to stay locked in. And this is the time where we're going to make a lot of wealth here over the next 2, 3, 4 years. So we have to do our most to be locked in during that time. Thank you very well, by the way, to everybody that wished me well. I am doing fine, just a little bit congested for the time being. So jumping into it right away, SPY pretty much flat on the day, up 0.01%, QQ down 0.06%, and the heat map too, guys, you can see very, very slow day. Not much big green, but also not much big red. Fairly mixed market across the board. You can see that best expressed in our big tech names. A few of them up, a few of them down, but not by too much percentage points either way. Healthcare as well, fairly muted. Financials, although financials had a decent little day, not much outperformance, just a very normal day for financials. And our bottom half of the market, guys, very, very mixed as a whole. You can see that best expressed in terms of our one-day relative performance. Half of the market pretty much up, utilities, industrials, financials, and technology, and half of the market down, but no real big red either, right? So all in all, fairly decent day. On the 1 week relative, we are still very, very healthy, and we're still, guys, still just looking for this potential daily higher low formation, right? So in the next few days, could we potentially be seeing some consolidation? Well, we're gonna have to keep a close eye on it, and we'll do that rundown when we tackle the technical analysis portion of the video after these earnings. So let's get right into our earnings right away, guys. We're going to start it off with a banger. We're going to cover Uber. So Uber, for the time being, currently down about 6% after their earnings. And as a whole, guys, I mean, their earnings weren't bad. Now, when you see this number, it might be a little bit misleading. They missed on EPS by 250%. They were supposed to come in positive EPS. They actually had a negative print, which no one was expecting. And that was due to some of their investments that they had to write down. So a one-time event is what had this negative impact on your EPS. Revenue, however, did very, very decent, coming in above the expectation by about 0.36%, so barely beating on revenue. That one-time write down on their investments, right? So they wrote off losses pretty much, giving them a negative EPS. That is pretty much the entire reason for today's drop. Nothing else is wrong with the company. Company's actually performing very well. So let's take a look at some other headlines, guys. And just before we do that, I just want to remind you where Uber stands right now. So Uber, for a very long time, was battling with profitability. You can see here, if we pull up this right here, a few years in the past, right? The past 4 or 5 years, they were always net margin negative. And last year was the first time where they were actually generating profits. And they have consistently been generating profits now for virtually, essentially the last 5 quarters, right? Very, very nice. The company is now profitable and continues growing revenue to the upside. The company also doesn't have any major debt either. Take a look down here, right? In terms of debt, about $12 billion, but they do generate about $3-4 billion of cash flow per year. And they're sitting on about $5.5 billion of cash and cash equivalents. So largely in a very healthy balance sheet position nonetheless, especially when you compare it, guys, to the previous 4 years when they really didn't have, much leeway in terms of free cash flow. Now they actually do. So the company's doing a great job in terms of their growth prospects as well. You can see very nice increasing positive EPS over the next 4 years, stark contrast to the past 4 years. And revenue just continues pushing to the upside as Uber becomes more and more of an integral part of a lot of people's lives. So let's take a look at the headlines here, guys. Uber reports first quarter results that beat expectations for revenue, but posts a net loss. So let's take a look at what exactly happened. The company's net loss widened to $654 million or 32-cent loss per share. That's the EPS from a loss of $157 million last year. Now, Uber said its net loss includes a $721 million net headwind from unrealized losses related to the reevaluation of its equity investments. If you don't know what that means, guys, well, Uber, for the past couple of years, has been investing in other ride share services across the world, not only in North America. And a few of those, unfortunately, just haven't played out how they wanted them to. So they had to take the loss on this, similar to how we write off losses for tax purposes on our own trades sometimes. Well, Uber did the same, except for this time, it's a $721 million loss. And that is pretty much the entirety of the loss, guys. If they wouldn't have had this markdown on their investment, they actually would have posted a positive EPS. So really, the headline doesn't do this company justice in terms of the loss that everybody's talking about. In an interview with CNBC Squawk Box on Wednesday, Uber CEO Dara Khosrowshahi said the company's move to a loss had nothing to do with the operating business. And that's true. It really doesn't have anything to do with the operating business. The business itself is doing fine. We did have to mark down those equity stakes that resulted in a loss, he said. We don't expect that to keep happening going forward. Now, for its second quarter, Uber said it expects to report gross bookings between $38.75 billion and $40.25 billion. Here is your guidance. The guidance was for $40 billion. So the midpoint of this is about 39 point something, let's call it 39.5, slightly worse than the expected guidance by about 1%. So not real much damage there, but still coming in a little bit light, right? This is really the environment, guys. We've seen it all quarterly earnings season so far for these Q2 earnings. If companies are not raising the bar on future guidance, they are getting hit hard, right? You've seen it time and time again. And the reason for that is because we're potentially heading into a climate of uncertainty, right? You've heard for now me speak for 3-4 months about the consumer discretionary income, right? People have less money than before. So especially when you have stocks that are highly exposed to consumer spending, such as Uber, we want to see management come out and raise guidance and say basically, despite the macro environment right now, we're still doing strong and therefore we're raising guidance. That is what Wall Street is looking for all these companies that are quote unquote consumer discretionary stocks, right? Stocks that people can live without, but still like buying. Think Starbucks, think Nike, right? Everything that people can buy when times are good, but when times get slightly rough, people usually pull back on those expenses, right? So demand for Uber remains robust across our platform, supported by our improving marketplace experience, the continued shift of consumer spending from goods to services, as we've noted on the channel, and the secular trend towards on-demand transportation and delivery. That's true, guys. Over the past 3, 4, 5 years, especially since COVID, people have made Uber, not only Uber, the taxi ride service, right, the ride-sharing service, but also Uber Eats. People have made it really an integral part of their lives for the most part. I understand that people are tapering back a little bit on it because of how high prices have come, but still the company has stated that it does remain strong. Now here's the two metrics. Mobility, right, for your ride sharing services, up 25% year over year. Very good. Now their delivery, Uber Eats, up 18% year over year. Very good as a whole, guys. Let's go through a few of their company slides just to show you the business is really growing in the right direction, right? So here is your monthly active users. Monthly active users up 15% from the Q4 of from measuring against last year, right? You can see nice trend in monthly active users. Yes, stalling a little bit in relation to Q4, but still very, very healthy. The monthly trips as well has been going up fairly decently, right? That is a 6% frequency growth year over year. So not only are people riding with Uber more, but every single person, every single one of these clients is using Uber more frequently. So that's the best of both worlds. That gives a total amount of trips up 21% year over year. Everything's doing very good. Gross bookings as well, up 21%. Very, very healthy. Revenue expansion, right? Over the past 5 quarters, extremely good. Adjusted EBITDA, right? So how much are they bringing in earnings after costs? That is also going nicely in the right direction too. So all in all, guys, the company is moving everything in the right direction. We're not going to dissect their financial statements, but I just want to show you that everything, their mobility segments, gross bookings, revenues, operating margins too, and their delivery highlights from their Uber Eats, right? Bookings, revenue, and adjusted EBITDA also going up. So everything is going good, guys. Revenue is going up. Profitability is going up. That is exactly what you want to see, right? The business is really operating on full cylinders. Really nothing bad to say about the business as a whole. One thing that I did want to show you is the reason for their loss lost today. So this is a slide of what Uber invests in. So you remember that I told you guys that they wrote down a loss of $700 million right here, right? Well, here is some of the equity stakes that they have in other companies. You can see they have a stake in the Chinese ride-sharing company, Didi. They also have Grab. Grab is somewhat like Uber Eats across most of Asia. I've used that one a lot when I do travel to Asia. Very good service. And the list does continue. Line down here is those mobile scooters that people leave all around town, you can just hop on type of things. So you can see, guys, they do have exposure to a lot of different companies to the tune of $5.6 billion in investments of other companies. This is their cash position. So they have a very big cash position of $5.8 billion, but they also have what you call marketable securities, things that you can sell to raise cash, also to the tune of $5.6 billion. So these investments, some of them that haven't been performing too well, those are the ones that they slightly had to tax loss harvest, in other words, which really hindered the company and made the company go down about 6% on the day, right? That and the fact that they slightly missed revenue guidance for the next quarter. All in all, though, guys, Uber, fantastic company. Nothing bad to say. In terms of our technicals, guys, we are always looking for monthly uptrend continuation, the breakout, the retest. Where are we trying to retest right now? Keep an eye on your $60 level. That is the previous all-time highs. If you want to draw a box, because it's not a line, the support zones are always a range, guys, right? Just think about $60 all the way down to roughly $50. Could be a great location for that retest on the monthly before we continue expanding here as Uber continues to expand revenues and continues just dominating the landscape, really, for not only ride sharing but also delivery services, guys. They're the king in the game, and this is going to be an industry where the winner does take most. So Uber definitely not going anywhere anytime soon. Now, in terms of their valuation here, guys, well, we've already went through a few of these, right? They're free cash flow positive. They don't have much debt. Their EPS is growing fantastically, 37% per year for the next couple of years. Their revenue growth also double digits. The reason I bring this up, guys, always look for double-digit growth on both of these segments, both EPS and revenue growth. Just shows you that the company is still growing very quickly. That's what most analysts want. They want double-digit growth. EPS growth is fantastic. So that gives them a 2024 forward PE at $66 right now of about 55. If you were to take this number on its own, seems a little bit high. That's why we run the PEG ratio. We divide the PE by their EPS growth rate to put it on a common denominator for all companies, right? This is how you evaluate different companies amongst each other. Ones that are growing fast, ones that are growing slow. Well, you will get the same result when you measure them on a PEG ratio. We want to get, because some companies don't grow at 37% per year. Some only grow at about 10% per year, right? So what we want to see is if you put everything on a common basis, which ones are cheap and which ones are expensive using a same valuation metric. So that PEG ratio is about 1.49. I'll remind you, anything between 1 and 2 is okay. Over 2 is slightly expensive. Under 1 is a very good deal. So 1.5 right in the middle, that's decent. If we could come down a little bit more here, down to the $60 range, even all the way as low as about 55, this PEG ratio should come down really maybe into the potentially like 1.3 range. That would be a very decent buy for Uber, right? As they continue generating profitable revenue, as they continue expanding their business. Still, guys, probably one of my favorite stocks to own over the next 5 to 10 years because they will continue to dominate the market. They will continue to basically assimilate all these smaller players, right? So this is a relatively new industry. It's barely 10 years old right now. What usually happens when industries mature, it consolidates to the top in only a few key players. And I do think Uber stands to win in that race to the top. So that's pretty much everything for Uber. Hope everything was insightful. Now, moving on to our second big one, we're going to cover Airbnb. So Airbnb coming down about 8% in the after hours. Excuse me, you can't see that. 8% drop in the after hours, down to about $145 right now. So you might think at a first glance that Airbnb had terrible earnings. Well, as a matter of fact, guys, no, they actually crushed it for this current quarter. But once again, similar to Uber, the problem was in the guidance. The guidance for next quarter and the guidance for the full year was a little bit light. And when you're a company like Airbnb and you're already running a slightly rich valuation, all of that guidance really does matter. So in terms of your earnings, EPS beat, fantastic beat, 79% on EPS. That is well above expectations, and a nice 4% beat on revenue. So they had a very dominant quarter. Airbnb, largely the same story as Uber, right? Airbnb for a very long time used to be an unprofitable company, but for the past 2 years, they've really been doing a great job of improving their net income and also generating significant free cash flow. Take a look here. Stark contrast between 2019 and 2020 when the company was losing money. Now you can see the cash pile is growing and their debt is shrinking. Debt only about $2.3 billion. Free cash flow that they generated about $4 billion last year gives them a cash pile of almost $7 billion. So very, very good. Balance sheet is extremely healthy. The financials of this company are very, very healthy. Now, in terms of their growth, are they growing quickly? Well, I'll let you guys be the determining factor of that. Take a look at this EPS. Nice, steady EPS growth. I know it kind of looks tiny, but because we're measuring up against this huge beat in 2023, so EPS is expanding fairly nicely, and revenue also is going to scale fairly nicely over the next 4 years. It gives them an EPS growth rate of a very healthy 16%, right? Revenue growing 11% per year, EPS 16% per year. Yes, it could be a little bit quicker in terms of our EPS, but the company is still growing, so probably better things to come for Airbnb. Similar to Uber, guys, Airbnb is a dominant player in your travel and leisure industry, and I do not expect that to change. Now, let's take a look at the article, see why they had such a big drop. So, Airbnb beats earnings expectations for the first quarter, but offers weaker than expected guidance. Once again, problem with the guidance, guys, heading into macro uncertainty, right? High inflation, rates higher for longer, consumer discretionary spending, uncertainty. We need solid guidance from these companies, and any company who's not giving solid guidance, right, is unfortunately biting the bullet. Think of Netflix, think of Facebook, right? If they miss guidance by even 1 to 2%, guys, that is enough for Wall Street to, hit that sell button. Wall Street only wants high quality companies that can weather any storm that the economy may throw at us over the course of this year. So, Airbnb said it is already experiencing robust demand for travel ahead of the peak summer season. This is very good. So their guidance for next quarter is a little bit light, but the guidance for summer, fall, and December as well is very, very strong. And we're going to get into that right now. So the company said revenue in its second quarter will come in between 2.68 billion and 2.74. So the midpoint of that is about 2.71 billion. Analysts were expecting 2.74. So they literally missed on guidance by 1%. 1%, and that was enough for the stock to drop 8% in the after hours. Overdone? Probably, but that's just the way the cookie crumbles. In its letter to shareholders, Airbnb said it is already experiencing robust demand for travel ahead of the peak summer season, particularly around upcoming events like the Olympics. The company also said it expects that year-over-year revenue growth for its third quarter, so not the one after that, right? For the third quarter will accelerate compared to Q2, where they have the weak guidance. So Q3 is going to be good, in part because of its summer travel backlog. So summer should be very, very good for Airbnb. Now, gross booking value, which Airbnb uses to track host earnings, service fees, cleaning fees, and taxes. So gross booking value, guys, is the total amount when you book a room on Airbnb or when you book a house on Airbnb, the total amount that you pay, that is gross bookings. Obviously, Airbnb does not keep all of that, right? A lot goes to the host, a lot goes to different service fees and whatnot, and Airbnb keeps what they call the net profits from that, right? So gross booking value is just the total number. So came in at 22.9 billion in the first quarter. Very good. Company reported 132.6 million nights and experiences booked, up 9.5% from a year ago and higher than the 132 million expected by analysts. So they beat on the nights and experiences, guys. This is very, very important. A hugely tracked a metric by Wall Street. And I do expect that to keep going up over the course of the year. Now, here's another good point. Airbnb app downloads in the US in the first quarter increased 60% year over year. Just goes to show you how many people are finally coming on board to the Airbnb train, which is probably now about 6-7 years old, but the company continues to gain traction, right? So average daily rates increased 3% from a year ago to $173 in the first quarter. Listen to this. This is very important. The average daily rates, so how much money you spend per night, they increased it 3% from a year ago, which is roughly in line with inflation. However, Airbnb said it ended the quarter with its highest number of active listings yet, and they increased 15% from a year earlier. This is very important what they just said, guys. They said that their active listings are significantly higher, right? 15%. So there's more supply of rooms on Airbnb, right? When there's only a few hosts on Airbnb, they can have prices very, very high because there's not a lot of supply, right? Versus the demand. But when you add more supply, when you add more hosts, as a byproduct, usually the price per night will come down as now there's more competition, right? But here's the thing. Daily rates increase. The company, despite having more supply of hosts, is still able to increase its rates. That shows that this company has pricing power, and that is very, very important in this current economic landscape, that's for sure. Now let's take a look at some of their investor slides, guys. You'll see that they're very, very good. So revenue beat here, 18% year over year, very good. Net income, their bottom line, 12% net income margins. That's very, very good for a company like Airbnb, guys. That's roughly standard with what they've been putting on a few quarters in the past, right? It ranges anywhere between 16, usually 12 to 20%. So a midpoint of about 16. So a little bit light in relation to prior quarters, but still a very decent quarter. Nothing wrong there. And free cash flow. Here's a very, very good number, guys. $1.9 billion in free cash flow. The trailing 12-month free cash flow for 4 quarters was 4.2. So if they keep up this pace for the remainder of the year, guys, this should be one of their best years of free cash flow ever. If we take a look down here, you'll see that their free cash flow last year was $3.88 billion for the entire year. Now in just one quarter, we already have half of that. So they should have a very, very juicy year of free cash flow, right? Your gross booking value, 12% year over year, and their nights and experiences booked 9.5% year over year. Very, very decent results by Airbnb, guys, right? And they did do a couple of new things. Number one that I like is group trips. So if you ever wanted to book trips with your friends, right? It may be a hassle to coordinate it all, but now since all of your friends have different profiles, you can actually create a group and book a location together. That is very, very good. People have been asking Airbnb for the past 2 years, and they finally implemented this. So that was a very, very good update for Airbnb as a whole. Right. The only other things that I wanted to show you, we're going to get into it right now. So just take a look at their quarterly revenue trends, right? Quarterly revenue trend, very healthy uptrend, guys. Quarterly net income, so went from loss leader to a profit maker, very, very healthy. Net cash provided by operating activities, so very, very decent as well, guys. After all expenses paid, company's operating income is going higher. And then their quarterly free cash flow, which we just touched on, right? That $1.9 billion continues to increase quarter over quarter. Trailing 12-month free cash flow is on the increase as well. This should be a very high number coming into the end of the year as well. And what are they doing with that free cash flow? Well, finally, since the company is now making money, now making profit, they are starting to repurchase some of their shares. So their share count is going down. Yes, it's going down relatively slowly, but still, guys, it's very, very good that the company is finally starting to repurchase some of their shares. All in all, guys, fantastic earnings from Airbnb. Although they did have a little bit of downside here today, in my opinion, still represents a long-term buying opportunity for the company. This zone right here that I've highlighted, right? This whole 145, let's call it, all the way down to about 130. Previous support, previous resistance. Now that we're coming down into it, should be acting as good support. So that could be a nice key area to pick up a beautiful company, monthly uptrend, looking for the monthly higher low for further trend continuation, guys. And further trend continuation will probably happen because their best quarters this year are still ahead of them. Yes, Q2, as they said, is going to be a little bit soft, but you saw how soft it's going to be. Literally 1% soft. So I'm still expecting a good Q2 from them. Q3 and Q4 is where this company really, really, really should start gaining the levels because they're going to be having extremely good numbers. That's pretty much it for Airbnb. And now our last one that we want to cover is another big one. It's going to be ARM. So ARM, you guys all know, right? The part of the semiconductor trade. They were very, very hyped back here in the early portion of the year, and they IPO'd pretty much last September. Now, a big question of this stock was their valuation, and since they've posted 3 quarterly earnings right now, we have a better indicator of whether or not they are a cheap company or expensive. Oh, my apologies, guys. We didn't do the valuation on Airbnb. Valuation on Airbnb, not bad, all right? So with their growth, forward P 147, 33.6, That's okay at a first glance, but when we put it as an expression of their PEG ratio, so PE versus their growth, is about a 2.10. Not bad. If we get back here to the lower, we are back here right now at the lower 147s. It's about a 210. If we dip all the way down back to 230, this should dip pretty much under 2. So that would be a better buy in my opinion down here at about the 130 mark. Now, sorry about that. Let's cover ARM right away. So speaking about ARM, guys, the valuation of this stock was always in question, right? So they are a semiconductor. They don't manufacture the semiconductors themselves. What they do is they manufacture the templates and the software to create these chips. They are a design firm, a software firm. They do not manufacture any products, right? And because of that, usually their margins are quite decent, right? For this company, as of most recently, their margins, as of last quarter, they're still growing about 10, 11%, but they are getting a little bit better. So what did ARM do? ARM currently is down in the after hours after their earnings by about currently roughly about 9.21%. So you would think that maybe they reported bad earnings. They actually didn't report bad earnings at all, guys. Their earnings were very good. So their most recent EPS, 20% beat versus the expectation. That is fantastic. And they did have a nice bump on revenue here, beating the expectations by about 7%. So why the reason for the drop? Well, keep in mind, guys, this company is up tremendously year to date. The company is still up pretty much 44% year to date. So they will have to justify that growth. And if their guidance comes in a little bit light, like it did, hint, hint, well, that is just a good excuse to sell the stock down. It's all about future guidance at this point, guys, okay? So let's take a look at some of the headlines here for ARM. So ARM's annual revenue forecast fails to impress investors. Shares tumble. When you see fails to impress, right? When you see these numbers, guys, it is very, very funny. A lot of these sell-offs are just overdone, guys. But as I said, leading into this earnings season, if companies don't justify the tremendous stock appreciation that they've had since the beginning of the year, Wall Street will have every single excuse in the book to sell shares down. And that's exactly what's happening. You may think that a few of these are overdone, but that's just, like I said before, guys, it's just the way that Wall Street works with these things. They want to hear the future expectations. And if companies aren't continuously raising future expectations, they just sell the stock down. So the UK chip designer said it expects full year revenue between 3.8 and 4.1 billion with a midpoint of 3.95. That compares with a consensus estimate of 3.99. Here's your full year guidance. Here is the fails to impress investors full year guidance, right? Midpoint of 3.95. And they were supposed to come in at 3.99. Literally 1%. Again, guys, 1% miss on full year guidance. Literally, the stock is down 9%. A little bit overdone? Possibly. Now, here's what the CFO had to say. I wanted to make sure we set a target that ties to what we have high confidence in, to what we can deliver, right? So this is pretty much your CFO saying they're sandbagging their own earnings. They're giving low forecasts so that they may be able to potentially beat them in the future, right? So under promise, over deliver, essentially. The timing of some of the company's licensing deals, he added, can be hard to pin down, which is why the company issues a range for guidance. So ARM's designs power nearly every smartphone in the world, and the company has attempted to make headway in data centers and other markets. Chips with ARM technology generate about $200 billion a year of revenue for the many chip makers that sell them. The company's licensing business grew 60% in the fourth quarter compared with the year ago period, and its royalty segment jumped 37%. We're going to look at that when we go through their slides, and I'll explain what this means. Through ARM's designs are found adjacent to chips that power AI applications. The company's revenue and profit have not benefited from AI to the same degree as NVIDIA's. This is absolutely true, guys. This is a company that just sells designs. They have two lines of businesses. The licensing business, where they license designs to different companies to manufacture different chips. And then the royalty segment. Well, all of these designs, as long as they're in use, they collect royalties every single year, which is why they're such a profitable company for the most part. Let's take a look at some of their highlights here from their quarter. So total revenue up 47% year over year. Fantastic past quarter for them. Licensing and other revenue up 60% year over year. The royalty revenue up 37%, right? So both lines of business doing very, very good. Non-GAAP operating income, 42% operating margins. So revenue minus operating expenses, 42%. Very, very, very healthy, guys. And now finally having some juicy free cash flow, $970 million. It was never really a problem for ARM in terms of their cash flow. The question was their valuation when they first IPO'd, right? So you can see down here, financials relatively healthy, not a lot of debt at all, $200 million in debt. Look at the cash and cash equivalents, $1.55 billion, and free cash flow last year pretty much, or last quarter if you want to measure that, $289 million. And for this quarter as a whole, their best quarter ever for free cash flow, you can see that $907 million. And this will just going to continue going higher as well as we continue moving into this semiconductor bull run. Very, very decent. They also reported their full year total revenue up 21% year over year. Very, very decent, guys. So all in all, very good quarter, very good year as a whole. Company still growing excessively quickly. They even say this total revenue, the highest amount ever. Take a look at this beautiful revenue curve. You can see these two lines of business down here. Their licensing when they first issue the designs, and then the royalties they collect when people are using them. Both lines of business moving healthily up. Right here, you see your Q4. So that's your Q4 royalty revenue as well. Annualized contract value going up as well. I don't want to spend too much time on this. That's why I'm kind of going through these relatively quickly here. You can see the gross profit moving in the right direction. Operating profit, although they had a little bit of a slip up here in Q4 of last year, Q4 of 2023 rather, still steadily to the upside, still in the high 40 or high to mid 40% range. Very, very good, guys. Nothing bad to say about this company as a whole. Right. Let's go through a few more here. So here's your guidance, a little bit of a lackluster guidance here for the full year. But as I said, may just be a question of under promising to over deliver. And here is why this company is so powerful in the world, guys. 285 billion ARM-based chips shipped since inception. This company has been doing this since the 1990s. Take a look at this here, guys. We're going to do this. We're going to come right down here, right? So in terms of their applications, right? CPU and subsystems for every target and market. You can find ARM chips in everything, right? In mobile, Android, and iOS, all using ARM technology. Infrastructure, think your data centers, right? NVIDIA, right? Linux, TensorFlow, very, very good. Automotive enhanced systems as well. They do that too. And then they have a bunch of other solutions as well. This company is just, they're like an octopus, right? They have arms in every single, well, I guess that's why they're maybe called ARM, right? But they have arms in every single line of business that's exposed to semiconductors right here, right? So AI smartphones, of course. I'm just presenting this to you in case you don't know the company, right? So mobile, think of phones, cloud compute, NVIDIA, Ampere chips as well. Automotive, they have the Cruise autonomous driving system, and think of IoT embedded. One example here is your Google Nest for any smart home devices, right? So very, very good, unparalleled software ecosystem. Very, very strong ecosystem, guys. They're partnered with the best of the best in everything, right? So all in all, guys, not going to go through much more than that. You guys can do that on your own time. The only thing that I want to say here, guys, is this stock currently a buy or is it currently still expensive? Well, take a look here. They're growing revenue at 18% per year. That is fantastic. Growing EPS at 40% per year. Also fantastic. That gives them a forward PE 2024 at $98 right now of about 63. On its own, that seems a little bit high, but when you take into consideration their very high growth rate, guys, take a look at this growth rate. Extremely rapid EPS growth rate and a very beautiful revenue growth rate as well. Very consistent for this company. Gives them a PEG ratio of 1.59. That's actually not that bad at all. If this company, for some reason, comes all the way back down here, 86, even towards the gap fill around $80, $80 would be such a sweet entry in my opinion here, guys. I mean, the chart is fairly young, so it's not like we can do long form technical analysis, but we are just going to be looking for the eventual monthly high or low for that monthly trend continuation, right? Semiconductors still hot, AI industry still hot, and that will remain the case for the next couple of years. When you're thinking of AI and semiconductors, think in years, not in days or weeks, right? And that will be a hot industry through 2030, and this is going to be one of your largest winners in that business, in my opinion. So my sweet spot for buying, guys, as close as we can get to $80 should be a very decent entry for some long-term gains, but I wouldn't expect this company to do something like this very, very quickly like they did back here. So that's pretty much everything we had for our earnings recap. Hope you guys enjoyed that. Trying to do these a little bit quicker, guys. I would have done them a little bit quicker, guys, but I'm still a little bit sick right now, so forgive me for that. So in terms of our technical analysis, guys, let's go through it right now. In terms of our SPY, well, SPY, we're going to go through these quickly, still looking for the same things. Daily uptrend, looking for the daily higher low. Now on the SPY, it's not very clear, right, if we lost the hourly trend or not over the course of the day. Just take a look at the futures, right? Futures, we didn't really lose much of an hourly trend, right? They tried, and now we're kind of back. So it's just really sideways action at the top here. Nonetheless, we are still currently expecting eventually for that daily higher low. And as soon as we start pulling back here, keep an eye on this zone right here. All of your moving averages are there, and our horizontal support is there as well. 509 down to about 503, looking like a very juicy area for the retest and then potential continuation of the daily uptrend. Now, on the weekly, the size of the weekly bounce is still very juicy as well. Size of the weekly bounce, roughly 80% at this point. So even if we were to lose this daily and go into a little bit of a daily downtrend here, well, the bulls have tons of space on the weekly to set the weekly higher low and try and get this weekly uptrend back. So all in all, looking very good right now, guys. I don't see any major red flags on these charts just yet. Moving into QQQ, same concept as the SPY, right? Daily uptrend, looking for that daily higher low right now. We're coming back into this area of support. All the moving averages are right there. And this green box, 436 down to about 427, that is a huge line of previous support for the markets, should act as current support as well. So looking for the daily higher low, anything above 421, just looking for that daily higher low for further trend continuation. Tons of space for the bulls, no real red flags just yet. And the size of the weekly bounce on this, we are currently in a weekly downtrend, looking for the lower high, right? So eventually the bears will set that lower high, and then we'll have to set a higher low and then reverse this back into a weekly uptrend. As of now, the market's still looking very healthy. The size of the bounces across most of your indexes are very healthy too. So no red flags as of currently. Moving on to financials. Give me a quick second. So moving on to financials. So this little pattern, I left it since yesterday, but this is essentially what we're looking for, guys. We need to get more above this most recent high that we had right here. I know we're above it now, but this daily uptrend is in motion, but I need to see a little bit more space created so we can use this area as potential support. If we were to start a pullback on financials now, that's fine. Daily uptrend, just looking for a daily higher low, anything above 40.2, just gonna be looking for that daily higher low for further trend continuation. Our moving averages are below us now, which could act as decent support. In terms of our weekly, guys, well, weekly uptrend. Now, if we close like this, they have the weekly uptrend back after having, had some little bit of weekly consolidation right here. Lower high, higher low, higher high. They've now recaptured this weekly uptrend in a beautiful motion right now, looking fairly good. Still above this 12 EMA, this yellow line, this moving average. Tapped it and now running a little bit. No red flags at all, guys. The red flags happen if we get an engulfing move like this, set the daily downtrend, and really start reversing some of this weekly momentum that we have. Then the red flags appear. But for now, guys, the market is still looking quite healthy. Overhead resistance is obviously your previous all-time highs, and those are about $41.60 up to about $42. But as a whole, guys, your financial sector is very, very healthy. Do you want some boring stocks that nobody ever talks about, but that continuously go up? Well, look no further, guys. You have to look at where is it in here? You see, these stocks are so good that they bury them in here. Financial data stocks, okay? So take a look at your year-to-date performance on your financial data stocks. You'll see that a few of them are fairly mixed, but for the most part, these are some of the strongest companies in the entire market because they don't really care about the rest of the market is doing. If you pull up a few charts, right? Pull up Moody's, for example, right? Moody's, boring company, nobody talks about it, right? Their long-term chart looks absolutely beautiful, right? Take a company like SPGI, very nice company. Their chart looks like this long-term, extremely powerful company, right? Take a look at another company like this. Which one is it? Give me a second. It's ICE Exchange. So these are all your financial data providers. Nobody ever talks about them, but their charts always look the same. Here's your Chicago Board of Options, right? Where you guys all buy your options from. Look at their chart long term. Here's a company that sells data and financial analytics models. FactSet, their chart continuously goes up. Nobody talks about these stocks. They are so boring, but they just continuously go up over time. A few of them haven't had the best start to the year so far. I will agree with you, but overall, they tend to just grind higher and grind higher and grind higher. So that's pretty much my little tidbit looking into financials. Look more into those companies, guys, if you have the chance, all right? Now, moving into XLV Healthcare. So healthcare not looking too bad at all either, even though they're down 0.34% on the day. Why? Because we're now in a daily uptrend, just looking for that daily higher low. Anything above 139.60, looking for the daily higher low for potential trend continuation. This whole area that we just broke out of will now be acting as nice support for the markets, and the moving averages are below us too. So looking very good, just going to be looking for the trend continuation. The size of the bounce on healthcare, though, as of now, still fairly weak, right? Weekly downtrend. We're looking for the lower high. Depends. How high can we get that lower high? Is it going to be up here? Is it going to be here? That is going to lead us to the probabilities for continuation in either direction, right? As of now, They only got as high barely 50%. So if markets were to reverse right now, the revisit of these lows would be highly likely. If the bounce continues all the way up here and then we pull back, then the likely scenario becomes higher low into higher high weekly trend reversal, right? So that is what I'm looking at for healthcare. All in all, this zone right here, very juicy location, 140 down to about 137. It's your previous all-time high. So I'm really expecting the bulls to be able to hold this, especially when you look at the monthly chart, right? Breakout, retest, and maybe run. My favorite company in healthcare, guys. I like consistent healthcare companies, right? Because a lot of these can be all over the place. When I want a consistent one, I look no further than AbbVie, and I look no further than a company called HCA as well, right? Just such consistent companies across usually all markets. Moving into semiconductors now. So semiconductors performing okay on the day, right? They were fairly mixed. Well, not very mixed. This is year to date. Give me a second. So you can see right here, fairly mixed, right? A few up, a few down, but as a whole, the index was up. Still just looking for that daily higher low, similar to the rest of our markets, right? Anything above 206.11, daily higher low for further trend continuation. Where we get worried on all these things, guys, if we see engulfing moves and loss of the support that we just recaptured. Engulfing like this, downtrend, well, unfortunately, guys, that would just be looking for the weekly higher lows eventually, right? So we'll tackle that if we get to it. But as of now, the dailies are looking fairly healthy. Just looking for that daily higher low, target this area right here, 216 down to 213. Nice area of previous support and nice moving averages as support as well. The size of the weekly bounce on this one, weekly downtrend, and now the bulls have a very sizable bounce as well. I've been bringing this up a few times in the past couple of weeks, right? So size of the bounce about 80%, similar to SPY, similar to QQQ, looking very good. So that if ever we lose this and set a daily downtrend, you will know that we're only looking for the weekly higher low to potentially reverse this weekly downtrend into a new weekly uptrend and continue this gorgeous monthly move higher. So that's what I'm looking out for on semiconductors. Moving on to IWM Russell now. So IWM not looking too bad at all today, right? 0.58% to the downside, but could be a lot worse. Now, keep in mind, still looking for that daily higher low once again, right? Anything above 195, looking for the daily higher low for further trend continuation. So far, the bulls in short-term control. Above our moving averages, and we are still above our big previous area. Big support. Resistance. This red box is so crucial to protect. So in any event, guys, if we start losing this daily uptrend, eventually something like this, right, where we lose it, we're just going to be looking for the weekly higher low to reverse this into a new weekly uptrend because we lost the weekly uptrend here with the flush of these lows. So now we probably have to do the two-step recovery process before we start attacking that 212 level. Now moving into Dow Jones. Dow Jones up 0.44% on the day. Dow Jones, very nice performance, to be honest with you, right? So daily uptrend is fully in motion right now, similar to everything we just saw. Simply just looking for, as soon as this move tops out, looking for the daily higher low for further trend continuation. Looking good above two key areas. Number one is going to be this 38,500 previous big support line right here. It's actually not a line. I could draw it as kind of a box, right? If you guys want me to do a box, that's much better, right? So something like this, pretty much. That's going to be our area of support, and we are also above our moving averages too. So looking very decent for a retest of this area and maybe run. If we do continue that, guys, well, the weekly move is getting pretty sizable on the Dow Jones, right? Nice recapture above the 618 level. That's exactly what we want to see. So in the event that we do something like this, we start rolling over the daily, well, we're just going to be looking for that weekly higher low for the trend recapture by the bulls. All in all, looking very good. We had the weekly uptrend here, but we lost it here by flushing these lows. Now we need to recapture that maybe in two steps. So now let's move into our big tech names, shall we? So moving into Apple, not looking bad on the day, up 0.19%, still kind of consolidating after their earnings. So the same analysis applies on Apple, guys. Beautiful daily uptrend right now, looking for the daily higher low for potential trend continuation. Apple is consolidating relatively close to the high end of their earnings move. What you don't want to see is something like this, right? That would be bad because then maybe we just get a tightening range before breaking out. But when you consolidate at the top end of an earnings move like this, just leads us to believe that Apple bulls may just want more, which is why I continue to say 180 down to 177 seems like it would be a very good pocket for me. Previous big zone of support, previous resistance, right? So I know this whole big green box was the area that we were looking for Apple, right? But within that green box, there's even a tinier box right about here. And what you'll notice is on the weekly, all of your major moving averages are right there, guys, 178 to 175. So if this daily trend does continue, guys, and even if we grind a little bit lower and come into this pocket, that's where I'm going to launch some trades on Apple. Gorgeous weekly engulfing move, looking for the weekly higher low and then the weekly trend breakout. It's been a weekly downtrend this entire time. Now the bulls have an engulfing chance to reset that in their favor and really put an end to this monthly consolidation and start pushing towards those all-time highs. So Apple not looking bad. Trade opportunity in this location, in my opinion. Moving into AMD. AMD also struggling a little bit on the day here today, 0.52%, right? They were just one of those semiconductor companies that were down on the day, unfortunately. So AMD, the analysis remains the same. So they've been in a downtrend this entire time, right? I'm not going to go through each of the legs. You obviously have tiny legs like this, right? Tried to get it back and unfortunately just flush. So at this point, guys, the bulls need to do everything from scratch. We need to eventually get the daily uptrend. If we do not have a daily uptrend, guys, you cannot look to say that this weekly bottom is set. We need to set a daily uptrend, right? So now the bulls have a decent sized move. We'll see, can they set the daily higher low? Anything above 140, going to be looking for that daily higher low and change the trend. What we really need to see is a move exactly like that, guys. If we can get a daily uptrend going and smash through this zone of resistance right here, 165 down to about 160, that is not only previous range support back here, but is also your previous all-time highs. We need to get back above that to feel more comfortable. If for whatever it's reason we roll this over and head lower, we'll keep an eye on this support zone down here, 140 down to about 133, prior support, and seems to be a very good location, guys, for the monthly retest of the 12 EMA down here before maybe embarking on another leg to the upside. As of now, the bulls are still in control of the monthly, but have to get our short-term timeframes back. Step number one is the daily uptrend, and step number two is going to be the weekly, right? Beautiful weekly downtrend by the bears right here. What the bulls need to see, is a decent move higher and then reset this weekly uptrend. Once we regain those controls, guys, you can say that the monthly lows are set and that we're probably heading for our next leg up, but AMD still a ways away from doing that. Moving into Amazon now. Amazon, nothing wrong with Amazon, even though they're down about 0.4%, right? So Amazon's still a very beautiful daily uptrend here after their earnings. No secret there. Any pullback just going to be looking for a higher low, anything above 175, tons of space for that higher low for further trend continuation. Keep an eye on this zone right here. Prior resistance, right, should be acting as newfound support right in confluence with our moving averages. So that's roughly the 183, 182 zone. Would not be surprised if Amazon just pulls something like this and then makes an attempt to smash this double top all-time high once again and start moving on to the 200 psychological level, right? Amazon looking very healthy on the weekly as well. No red flags here whatsoever. Gorgeous weekly uptrend simply continues. I would like to see Amazon in the next couple of days give me a green push and close above our previous all-time highs here, and that would really send us probably into the 200 range within the next 2 to 3 weeks. All in all, guys, very good company, very solid earnings, but as you can see, still battling right now with our prior all-time highs. That's the only thing that's standing in our way. Now moving into Google. Google not looking too bad either, right? Very nice recovery after their earnings dip. This is exactly the kind of like Apple was doing, right? The first 4 days of trading for Google after their earnings. Look at Apple. First 4 days of trading for Apple. Can Apple maybe get to see some benefit to the upside now? Because that's what Google did. Well, possibly, but in terms of Google now, right? Google, not looking too bad at all. Still just looking right now for the daily trend expansion. Now, if we don't break this and instead we start rolling over, that's not too big of a deal, guys. Yes, we'd have big support down here, 164.70. But even if we were to roll this over into a daily downtrend, you have big support down here, guys, 161. And that would just be looking out for a very healthy weekly higher low for further trend continuation. Nothing wrong with Google stock whatsoever right now. The chart is extremely bullish. We're pushed beyond all-time highs. The monthly trend is absolutely gorgeous as well. Everything moving in the right direction for the company. So remains to be seen. Google is fairly muted in terms of our price action. So whether we tighten up here, right, or just break to the all-time highs, I do believe the end result will be the same. New all-time highs are coming for Google probably within the next 1 to 3 months at this point. I don't see any reason for the stock to slow down. Free cash flow monster, huge share buybacks. Company is really moving in the right direction, starting to listen to shareholders and really doing a good job of cutting costs and buying back shares. And this should push this company higher. The ideal location for a trade for me at Google at this point will be really this 161 area. If we get a little bit of a revisit here, I think it's such a juicy opportunity to kind of snipe a weekly higher low for further trend continuation. Now moving into Meta. Meta not looking too bad at all today, up another 0.93%. Now we're getting real close to that earnings gap fill, right? So we're kind of almost there, battling with our moving averages, and now we have overhead resistance 481.50. So daily uptrend, nice, but we're coming into resistance. So if we get rejected from here, going to be looking for that daily higher low, anything above 428, just looking for that daily higher low, and then maybe attack this level for a second time on Meta. Meta done a great job recovering the weekly as well. Take a look, the size of the weekly bounce is getting quite adequate, guys. 50% bounce already. If they can get a little bit more coming into the 480 range, right? That would give us the 618 retracement, the golden level, and then they may be able to set up the weekly higher low, and then for a weekly trend change. It might be a bit challenging for the bulls to break through that area in one clean shot, right? A lot of overhead resistance, not only horizontal resistance right now, but also your moving averages are kind of acting against us right now. So maybe the more likely scenario is just to retest, get more momentum, and try to smash this to the upside. My trade location on Meta, if we can see a little bit of a pullback here, I'll probably be making some short put trades here down in the 426, but this is still a great opportunity, guys, to be adding such a healthy company to any portfolio, rather, because they are relatively cheap, guys. I mean, even at $470, which is, we did this analysis at about 415, right? So 415 plus 475. So they're up about 14%. So this valuation right now, their PEG ratio is only about a 1.5. That's really not that bad for a stock like Meta. So looking very good. Now moving into Microsoft, excuse me, give me a quick second. All right. So moving into Microsoft right now. Not looking too bad on the day, up 0.29%, right? But as a whole, guys, Microsoft still battling with overhead resistance right now. I was looking at this one a lot today to see if we can retest this area again or whether or not the bulls were going to roll over. It seems as though they're trying now to set the daily higher low. Anything above 389, looking for that daily higher low for the daily trend change. Still don't have a daily trend change, right? Daily downtrend, engulfing move. Now we need the higher low, higher high trend change. In my opinion, that's probably what the bulls are going for. Got stopped out at the resistance here, and now they may need to just gather more momentum down here before making an attempt at smashing that 415 level. All in all, though, Microsoft not looking too bad. If we do retest these lower levels, my short puts go right about here, 390. That could be a very good opportunity to get some juicy premium on Microsoft. Even to add some shares to the long term, I really don't see an issue with Microsoft stock, right? Still just kind of trapped in this previous range. So we really need this daily breakout. That would also be a weekly confirmed breakout as well. And then we'll be looking to attack these all-time highs around the 430 mark. So the bulls, not on the woods yet, still need to see that daily uptrend manifest. Now, moving on to Netflix. Netflix, super healthy recovery. Doesn't it look like Meta, guys? Drop, bit of an unjustified drop after earnings, if I do say so myself, and then recapturing everything. Look at Meta, right? Same thing. Unjustified drop after earnings, recapturing everything. Well, Netflix is just a little bit ahead of Meta right now. They've literally filled the gap and got above the previous area of resistance, so they're now through that. So as soon as this move tops out, just looking for the bulls to set a daily higher low and continue this trend to the upside. Where could they maybe set this higher low? Well, a good location could be right here, 585 all the way down to 575, guys. This little pocket right here, moving averages are there, and we got that 575. 575, this yellow line is a huge level, not so much here, but from all the way back here. And yes, those price levels are still relevant. So looking fairly good on Netflix. Just going to be looking for that daily higher low for further trend continuation. No red flags. Such a solid business, guys. We covered Disney earnings the other day. Netflix is eating Disney's lunch, guys. In terms of the streaming business, it's not even close right now, right? So very good job by Netflix. And in terms of your longer term charts, guys, the bulls have never lost control, right? Still a gorgeous monthly uptrend this entire time. Looking very good. Would not be surprised to see Netflix at all-time highs at some point this year. Moving into NVIDIA now. So a couple last ones, guys. So moving into NVIDIA down about 0.16% today. Not the best of a day for NVIDIA, but still kind of sideways action, right? At least NVIDIA is doing a good job in holding up this daily uptrend. Still just looking for a daily higher low, anything above 810. Just looking for that daily higher low for further trend continuation. We're coming up prior resistance should now be support. That is 875. And the moving averages are there as well. And at worst case, we do have this 850, big support in the past, this 850. So this whole little pocket, guys, 875 down to 850 could be a very good location for the bulls to just gather some strength before another leg up. Now, on the weekly, if for ever which reason we roll over on NVIDIA, something like this, right? Or something like this, because NVIDIA is a bit more aggressive, the bulls on the weekly have created a ton of space, right? At worst, we may end up in a tightening range, if anything, similar to what NVIDIA did over here, right? Just move up into the tops and then kind of tightened up there for a while. This could be a similar situation in the event that we really start moving lower into the earnings, right? That would just be looking for a weekly higher low, and then maybe earnings will send us over the top. But if earnings are underwhelming, I wouldn't be surprised if we just kind of get trapped in the sideways consolidation as NVIDIA just grows in to its valuation expectations, right? All in all, though, no red flags on this stock whatsoever, neither on the daily, neither on the weekly, and neither on this gorgeous monthly uptrend as well. Everything's looking very good. Still, only about 8 trading days left before NVIDIA earnings come out. That'll be Wednesday, the 22nd of May. Moving on to Tesla now. So Tesla having a nice little dip here in the morning. Well, it was actually quite an aggressive dip on the morning. Follow through from yesterday's downside, right? So daily downtrend is now set. We're battling with one of our last areas of support, this 170 down to about the 165 range, last area of support for Tesla bulls. So it's been a nice move up. Now they've lost this daily uptrend. Well, they've lost the chance at setting the daily uptrend. We're now in a daily downtrend. So Tesla's doing two things at once. Yes, it's consolidating on the daily, but also consolidating on the weekly. We're trying to set the weekly higher low for further trend change. That's why I say this 170 down to 165, crucial level, guys. Need to protect that and then get a weekly uptrend. It's been a weekly downtrend, guys, for a better part of the last year at this point. So this could be a nice chance for the bulls to turn that around. We'll see if they can do it, but I'm still having a little bit of cold feet towards Tesla, guys. Their earnings, yes, I mean, I know Elon was bullish. I know they have great products coming out in 2025, but where are the immediate changes for the next 2 quarters? There were none, and I don't mind, guys. I'm a Tesla bull as well, but you have to admit there is no concrete improvements over the next at least 2 quarters. Interest rates are still high, demand is still low, and Tesla is still in a bit of a pricing war right now. So no fundamentals have changed for the company in the short term, which is why I say would not be surprised here, guys. Don't expect, I'm not saying that the stock is going to crash, right? What I'm just saying is don't probably expect something like this, like Tesla's done in the past. It is just not the favorable market environment for them. If anything, if they do start putting in the weekly grind higher, guys, it will be just that. It'll be a grind, right? I know we're used to Tesla doing moves like this, doing moves like this, doing moves like this, right? It's just not the environment for them right now. I said it before, I'll say it again. It's not a Tesla problem. It's an overall auto industry slowdown as a byproduct of higher rates and consumers having less money. Moving on to Palantir now. Palantir is still trying to recover after their earnings quote unquote disaster yesterday, even though their earnings were very good, right? A lot of overreaction here on the stock. So Palantir is still down a little bit, still trying to find their earnings bottom. Now, Palantir was in a daily uptrend. We have since lost that. We lost the higher lows. The bulls have to start from scratch. I need to see nice move up, right? And then reset of the daily uptrend. So as soon as this move down is bottomed out, how do you know it's bottomed out? Look for the hourly trend change. If we can get the hourly trend change into tomorrow, we'll be looking for the size of this bounce. And for the bounce size, guys, I need to see it get back above these 2 levels. You need to get back above your moving averages, and you need to get back up above this 23. 23, big support, big resistance here. Resistance again, right? We need to get a mount above this, set the daily higher low here, and then run. That would be the best case scenario, right? If in the event we are to roll over, no problem at all, guys. We're still just looking, right, for this weekly consolidation to continue in our sweet spot. Big previous zone of support, previous resistance. So 20 down to about $19 is the bottom end of the range that I would be very looking forward to buying Palantir in. Just looking for the monthly higher low, guys, for further trend continuation. And as this month progresses, your monthly moving average is slowly going to move up into the 19 level. And you can see this moving average has been acting as great support for this market this whole time. That's why, in my opinion, 19 is maybe as low as she goes. So the bulls have a lot of work to do, but we need to see something like like this. Or if we move lower, let's say we move lower from here, need to see a nice bounce, maybe coming all the way up to 22.5, and then try and reset the daily uptrend, right? So the bulls still with a lot of work to do, but not looking too bad since we are in the buying opportunity zone. And lastly, PayPal down 3.2% today. What a heck of a crush for PayPal, right? They try and they try and they try, and the market just doesn't reward them. So now daily downtrend by PayPal, losing the moving averages as well. Even this green line right here, that's your 200, risking losing the 200 again. And if that does happen, guys, in my opinion, we are coming down to this lower level right here. As a matter of fact, let me just erase that and let me just replace it with this box right here, so you can see it a bit more clearly. That is the 63 down to roughly the $61 range. Big area of previous congestion. Tried to use it as support as well. So hopefully the bulls can do a good job of holding this up, but the bears, full short-term control of this stock right now. And even on the weekly, guys, the weekly is not looking the best anymore, right? We are still in a bit of a weekly tightening range. So weekly uptrend, and now getting stuck in a little bit of sideways consolidation. The level we cannot lose, in my opinion, is 61.80. Close below 61.80 on the weekly. It will be again a weekly downtrend, and again will we be stuck in PayPal monthly consolidation after only 2 short months of upside for PayPal, once again into monthly consolidation if we do break that 61.80. So not looking the best for the company, but still the valuation down here makes a lot more sense. Anything below $60, right, is where I'm trying to personally play PayPal stock, because this year is just going to be a transition year for them, kind of like Tesla, guys. Don't expect PayPal over the course of this year to really skyrocket to the upside. It's going to be a transition year. If anything, they get brought up with the rest of the market, right? Rising tides lift all ships, but this company's fundamentals should not improve drastically until maybe Q4 this year, or maybe even early 2025. So unfortunate situation for PayPal. Just one of those growth names that doesn't have that much growth left in anymore. I still like the name, but in terms of me positioning in the name again, I'm going to have to get it very cheap. So hopefully you guys enjoyed that portion of the video, guys. Now let's take a brief look into my portfolio. All right, guys, so taking a look at the portfolio for the time being. So here are all of yesterday's earnings plays, and you can see that most of them were closed at a profit, except for Shopify. We took a big bath on Shopify, unfortunately, but everything else performed very well. If you want to see the total gains for the day, well, you can see here that this is the Tuesday session right now, and we realized minus $815. Most of that was from Shopify. We had 3 Shopify 65 puts, and Shopify came down tremendously, guys. It was actually the worst one-day drop in the company's history, and fitting enough, it was below my strike price of about 65. We were all the way down into the low 62s and even 61s early on in the day. So unfortunately, guys, I had to close this one at a loss. We are just going to move on. Once again, it's caught in the discretionary stocks, right? Their guidance was just not good. They had a very good previous quarter. We'll cover their earnings in detail tomorrow. It was their guidance, right? Timid guidance surrounding consumer discretionary stocks. I probably should have listened to the prior consumer discretionary stocks. Think of Starbucks, right? Starbucks down. Every single one of the plays that I've lost in the past 3 months have all been the same plays, discretionary, consumer discretionary stocks, right? And I go very deep and I still take losses, guys. So the first one, if you may remember from a few months back, was Dollar Tree. We got caught in pretty much this consumer discretionary concerns. The most recent one was Starbucks, discretionary income concerns, right? We got caught in Nike at the late part of last year after these earnings, consumer discretionary spending concerns once again. And most recently, guys, companies such as the ones that are closer in relation to Shopify's business, right? eBay coming down after their earnings. And another one, although they are smaller than what Shopify does, but they're still in the same branch of businesses, Etsy came down 15% after their earnings. So unfortunately, guys, Shopify once again issuing that maybe consumers have less money this year and it could impact their business. Stock was down 20%. So you guys know the strategy. We're not here to yet play the wheel strategy. Could I have held this position into future weeks and maybe roll it out? Potentially, guys, but it's just not the strategy that I'm running. We may reevaluate this play at some point in time next week or the week after. But as of now, guys, we're making a mission, guys, of getting into plays and getting out of them pretty much the next day if we don't have high conviction in the stocks, right? So Yes, huge loss on the day for Shopify, $960. But we did make some good profit on the rest of the companies that we were in. And although this loss seems like a lot, and it did erase a portion of yesterday's gains, this week for me is largely flat, guys. There's a lot of things that we still haven't realized yet, right? So we have the SoFi calls, $200 unrealized there. Apple, $51 here. In Palantir, $93 and $160, right? Plus the realized. So let's do the math together, right? So 245 realized plus all the unrealized ones, right? So $200 there, $51 for Apple, $93 for Palantir, another $160 for Palantir, right? That brings us up to about 749 outstanding, right? And I haven't even counted the Tesla one. So there's a Tesla one down here. Right, so we have another Tesla play down here. That's 793, and we realized what happened today. Well, total P&L realized was about 815. Oops, about 815. So we're only really down $22 on the week, guys. Now I know that it undoes a lot. It does a lot of damage when you take one of these, but such is the name of the game, guys. That is the risk that I was willing to take. I felt fairly confident in my strikes. I went 2 times the expected move, and that still wasn't enough. But the strategy does perform fairly well as long as you don't get too greedy with your strikes. Imagine what would have happened, guys, if I would have just went for this support level right here around $69, right? We would be down over $2,000 on that position. So at least I was conservative enough. That helped mitigate the loss a little bit. And what also did not help the loss was the fact that I wrote 3 contracts on Shopify, right? That was probably my only mistake. Should have maybe kept it to 1 or 2, considering the fact that it's a consumer discretionary stock. Did not expect them to miss this much. But unfortunately, guys, you win most trades, but sometimes you take big losses. But all in all, you saw, took an $800 loss on Starbucks last week. It doesn't faze me. We have to take these, move on, learn from them, guys, and just adapt. All in all, been a very decent past 3+ weeks of earnings for us so far. So we're going to keep on marching forward. And that is not all. We do have a lot more premium on the table for this week as well, or for tomorrow, right? So we did take a few earnings plays prior to our earnings today. So you'll see that the portfolio, a few things have not changed, right? So SoFi covered calls are still there. We did write 5 Robinhood puts, $14 strike for about 10 cents each. So that was a very good trade. I'm pretty happy with that. Robinhood came out with their earnings in the after hours, and you can see Robinhood now up, a couple percentage points. Let's call it about 3.5% in the after hours. So tomorrow, these contracts for me should, even though they're for next week, because I wanted to get as much premium as possible, they'll probably be very, very close to worthless. The reason I chose Robinhood is simply because it's a brokerage, guys. And the markets, what have the markets been doing in Q1, Jan, Feb, and March? The markets have been going like this, right? And crypto has been going like this. And usually when markets go up, 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 people trade more. So I was expecting a Robinhood, if anything, to have decent earnings, right? Which they did. So fairly happy about that one. In terms of the other plays, Palantir is still here. The other earnings plays that we have for tomorrow, we have Roblox 29s, 3 contracts for next Friday, not this Friday. 10 cents a pop. You may be like, well, that's cheap. Well, keep in mind, guys, Roblox, I went very, very far, guys. I'm not taking a chance on a company like Roblox. If they want to, if I'm going to get this stock, I'm going to get it very, very, very cheap. Take a look at the expected move on Roblox. Expected move on Roblox, company sitting at $39. Expected move is about 11.5%. Where did I go? I went with the 29s, this red line down here. $29, from current share price. That would be a move tomorrow off earnings of about 26%. Even Roblox's worst earnings last year was about 22%. So 29 is really the bottom end range of where this company has been in the past. So we'll see what happens with that. But at least I gave myself a very, very wide margin of error, guys. That is the name of the game, right? In terms of the other positions we have for tomorrow, we had the ARM 77 puts. I went very conservative with them, guys, just because I knew that ARM stock has run up a lot. And if for some much reason they missed, now they missed by a little bit, but imagine they missed by a wider margin, the stock could have come down a lot. So I went with the 77 puts. So ARM was fairly, before the close, we got a very, very nice margin of safety on this one, right? Before the close, they were about 106. My 77s were 27% away. That's how safe I was being playing the prior earnings gap fill. So we should be able to end those pretty worthless by tomorrow. They're for next week as well. So we should be able to pull out most of the value of these contracts. We got about 25 cents for those. Very happy with that trade. Now we also went with the trade desk. So trade desk also had earnings today after the close. They performed not the greatest. They were down about 10%, or actually that changed. They're now actually positive. They were down about 10% prior. I guess big swing for the company, right? So those should pretty much end worthless. You can see here, Trade Desk 69s for 31 cents a pop. Wrote two of those guys. Where was 69 prior to your close, right? 69. Look how far I went, guys. I went 20% out, which is roughly pretty much in line with our previous support zone down here. Really being conservative on these, right? 20%, that's about 2 times the expected move. Expected move was about 9-10%. So I went 2 standard deviations and got a, somewhat respectable amount of premium. These are for next Friday, but since the stock didn't change, these probably should be worthless by tomorrow. So I'll be able to collect most of that, $62, right? 2 times 31 bucks. The other contracts, Apple is still here, almost worthless as well. So we should be able to close those max profit by the end of the week. We went the Airbnbs as well. We went the Airbnbs 140 puts and 135s for this Friday. So the 140s, I got 69 cents, and the 135s, I got 31 cents. So Airbnb, although I love the company, didn't want to overdo it because it is, although it's a travel stock and travel stocks have been strong, it is still consumer discretionary. If they would have said people are a bit more cost conscious on their spending, well, that could have hurt the stock. And as a matter of fact, the stock is down 8%, right? But I gave myself a wider margin of error. I went 11% and for the 135s, 15% respectively. The move on Airbnb, the expected move, was about 8% if I'm not mistaken. Let me just check that. It'll probably be all wrong here because the stock has moved in the after hours. Let me just try to pull it up for you guys. It was about 8.5% if my memory does me justice here. Let me try to pull it up again. Give me a quick second. Well, while this loads, all right. So Airbnb, yeah, you can see it's kind of all screwed up here, guys. So when the earnings come out, so that you'll just have to take my word for it. It was about 8-9%, I want to say. So I went the 140s, which is all in this green box is my target area of support. So I try to get as low as possible while still getting some premium. I'm fairly confident that Airbnb is going to be able to maintain above 140 and 135 by Friday. So this should be a win in our pockets as well. Then we also took the APP. If you guys don't know much about this company, well, it's a very, very solid company. It's a software company as well. They usually perform well for earnings as well. And I just liked the premium on this one. So we went with the 58 strikes. So that was a full roughly 20% off the expected move. The expected move was about 10%. I went 2 standard deviations away. We went with the 59s. I was fairly sure that this was going to be a fairly easy play, a fairly easy bet. So that's why I went with 2 contracts and kind of staggered them, 59 and 58. We got $30 and $15 for those two. They should end worthless. This company reported earnings after the bell today, and you can see they're all the way up to 85, up 15 healthy percent. So we should be able to have a nice win there. And then we have the Tesla put. I haven't closed that yet. You can see that right here, right? Tesla right here, 1675s. We should be okay on the Tesla before Friday. I'll hold it till Friday. We had another Trade Desk put here for 70s. This one was for, so I had a couple up here. We had the 69s, and I went a bit higher. I went with the 70s here for this Friday. These are for next Friday. This one's for this one's for this Friday. Those are for next Friday, excuse me. We got $24 there. And then we also have the Uber. I played Uber again, even though I closed my Uber contracts this morning, the 62s. I liked the price action during the day, and I said, you know what? Let me just go with the 64s. I wrote these at the close pretty much. 64 would pretty much be below the low of earnings. So I don't think we closed much below there before the Friday session. So I should be able to pocket this money. And if ever I get assigned, I get 100 shares of Uber at a price that I really like. So you can see, guys, we wrote a lot of premium today, right? Probably close to, $250, $300 in premium. So all in all, not that bad of a week so far, right? We smashed all of these earnings. We shouldn't be assigned. Oh, I didn't even show you my Duolingo, 185 puts for 80 cents. This is for next Friday because they only have monthly contracts, no weeklies. We got 80 cents on those. So fairly juicy. Duolingo 185s. Duolingo, I gave myself a wide margin of error here, guys. Look at how far 185 is, right? So 185 would have been a move. Duolingo as well was pricing at about 8-9% up or down. We went 24% away. That's how conservative I'm being on these plays, right? Lower area of support as well. You can see it best on the weekly. It's really our lower range right down here, right? So I was pretty sure that Duolingo would not drop. I mean, nobody knows if they're going to go up or down, but I was pretty sure that they weren't going to drop 24% after an earnings because usually their past earnings, if you go see in the past, they usually always beat. And then when they miss, they don't miss by too much. They only usually go down about 4, 5, 6%. Now you can see they're down 11%, which is one of their worst quarters in recent memory, but still not enough to potentially run the risk of assigning me. So all in all, guys, very nice day and all. We'll update the totals and profits by tomorrow, but for the most part, guys, we should now be in profit this week. I know not as much as we would have been if we didn't have the Shopify, but sometimes that's just the way we go. Very happy with our market performance so far. So hope you guys enjoyed the video. That's pretty much everything we had for you. If you did, consider dropping a like. Would really appreciate it for the algorithm. And second, consider subscribing to the channel if you're new, guys. We do these videos every Monday to Friday. So be sure to sign up and participate in the channel, guys. Really appreciate your engagement so far. And lastly, if you have any questions whatsoever, feel free to leave them down below in the comments. Usually answer you within the first 24 hours. Anything you want, guys, stocks, technical analysis, options play you're thinking of, anything you want, macro environment stuff, anything you want, please leave it down below and I'll be happy to engage with you in the comment section. So take care, guys. See you tomorrow. Happy trading and peace.